Good afternoon. This is Eric Cunningham with Century 21 Real Estate, North Atlanta, Georgia. And today it's my great pleasure to introduce Michael Anthony, who is the Vice President of Mortgage Lending with Mutual of Omaha in Metro Atlanta, Georgia. Today's topic of discussion will focus on current issues facing the mortgage industry that apply to home buyers. So, Michael.
Thanks for having me, Eric.
Thanks for coming over.
Absolutely.
And spending some of your day with us.
Absolutely. Thanks for having me. Appreciate it.
Tell us a little bit about yourself and how long you've been in the mortgage industry. What are your goals for clients seeking to improve their real estate portfolio?
Sounds good. Well, again, Michael Anthony, but I run the Anthony Lending Team, which is a part of Mutual of Omaha Mortgage, and we're in Marietta, Georgia. I've been down here, been in Atlanta for 27, almost 28 years now, and have been we literally moved down here to start our company, our little small mortgage shop years ago, and fast forward through many different cycles and some amazing times and some rough times, but we're here now and have an amazing team behind me, and again, my goal is originate loans for new home buyers. I get the biggest satisfaction I think out of helping the first-time home buyers achieve home ownership.
Yeah, me too.
And then of course, being in the business so long, I've got just a great loyal following of customers that I've been able to help countless times over the years.
And you've been helpful with CE classes, continuing education classes as well, because I've attended a couple of them and they've been very instructive.
Yeah.
So for those watching this video, what category of buyers do you usually work with?
Well, and I'd mention, first-time home buyers is definitely a group of customers that probably most gratifying because they're eager, interested, they want information, they really thrive for it. I think a lot of people think, the young kids nowadays, they don't, it's all electronics, they don't want to meet with you, they don't want to talk with you. But I really find that it's not true. The young people today, they want information, they want to be educated. They want to understand the process. What are their options? So, love first-time home buyers. That's it's definitely a good segment for me. And then I would say the other half of my business is that move-up buyer. It's the first-time home buyer that I helped 5, 6, 7 years ago, and is now ready. Maybe they've got had one child, and they've got one on the way, and they want to move into the suburbs and maybe get better school districts. So we do see a lot of move-up buyers, and it's great to see them coming back and see their families grow. I mean, it's definitely rewarding.
That for me too is whenever you start out with a couple and then you see the family grow. That's always an enjoyable experience for me. In terms of say FHAs or veterans, what percentage do you work with in those categories?
Well, we're seeing a little bit more of the government loans coming back. Now being in 2023 now, we love the VA loans. FHA loans are really great with somebody that maybe has had a credit issue in the past. But as you know, last year during COVID, the market was so competitive that the sellers didn't want to deal with government loans. Because they have the government loans protect the buyers, right? Appraisal contingency, the appraisals will last the whole time. Yeah. Right. So those loans were really difficult to get accepted last year. It was almost all conventional.
So if they appraised, that was a key thing because people would come in with multiple offers and bid up the price ridiculously.
That's right. Absolutely. However, this year, now that buyers have a little bit more leverage in this market, just looking at like some of the closings this month, had a VA loan close, had an FHA loan close, had a conventional buyer close where, this is a great story. Just tell you real quick, this was a young couple, second time I'm working with them. I did their first loan about 6 years ago in Smyrna. They were wanting to do a bigger home, start a family, worked with them. I started about 9 months ago working with them. So think about that early spring of last year, we started working. Didn't have a ton of extra cash to bid above market price and waive all the contingencies. They just couldn't do that. Right. We lost out on about 9 or 10 offers last year just because they couldn't compete. Right. They put an offer on a great house in Marietta on December 31st, about $550 range. They got 100% of the closing costs paid for.
Fantastic.
I mean, every single penny of closing costs paid for. They came with their
awesome.
down payment. So, and they are just ecstatic. So, I mean, that's like one story of that wouldn't have happened last year. It just wouldn't have. So,
Yeah.
that's a great story about where buyers right now have a little bit more leverage than they did.
They have a tremendous opportunity right now before everybody else starts seeing the light at the end of the tunnel, and they start jumping in the game too. And that's whenever we have multiple offer situations, and I have to be the bearer of bad news because we came in second place or whatever.
Right.
So
Exactly.
you touched on credit repair. Can you elaborate on that a little bit too? Because I have some clients that have raised that issue with me, and I said, I know people that can help you.
Mm-hmm.
What would you be able to help them with?
Yeah, I mean, when we qualify somebody, so we're looking at four main things. We're looking at credit, obviously income, assets, and then what we call debt to income ratio. So how the relationship of their income versus their expenses. First thing is we look at a credit report and we look at credit scores. The number one thing that obviously a lender is going to look at.
Now, one thing I want to point out, and you can verify this, does it hit your credit FICO score hard, like if you were applying for furniture or TV or something?
If it's a hard inquiry that it does show up on the credit as an inquiry, it will affect the score a little bit, not very much. I think that whole credit inquiry is going to damage your credit. I think it's overplayed in the media. There is a small effect to it. We have the ability to do a soft pull or
Right.
a hard pull. I had a customer come to me a couple weeks ago, and he said, Michael, I know I'm not ready. I've got this, and this on my credit. I think I've got some work to do, but I need a plan. I need a plan so I can work towards it. So in his case, we knew it was going to be 6 to 9 months. So I said, look, let's just do a soft pull, because the nice part about it is I get the same exact information. I get the 3 scores. I get their full credit history, but it doesn't show up as an inquiry and it doesn't affect them. That is a great planning tool, because we sat down, we put together a plan. He knows what he needs to do now to get his credit bumped up to where it's going to be beneficial for him to buy. And if a credit scenario is it's in such shape where it's just above my pay grade, right? I'm not a credit repair specialist, but I can definitely help with education and some tips to bump scores, especially when it's related to like maxed out revolving debt. If there's collections, charge-offs, judgments, and it gets really difficult,
yeah.
There are credit repair companies that we would refer to because they're experts at that.
Okay. All right. Well, with the nonstop media dark outlook in the housing industry, let's talk about some current challenges regarding today's market outlook and the overlooked opportunities for buyers.
Sure.
You're probably seeing what I'm seeing. So,
Yeah, I think if you listen to the media, it's a terrible time to buy. There's going to be a crash. Rates are high. So there's definitely media is typically negative, right, Eric?
they need to captivate their audience.
Exactly. So I caution my buyers and my customers. Look, let's look at your individual situation, right? We got to separate the noise from reality, and the reality is, Atlanta just voted it's going to be I can't remember the publication, but the number one real estate market in the country.
Realtor.com.
Realtor.com for 2023. So there is a lot of people that I talk to every day, and even the past 12 months, that are relocating from different markets, from higher taxed markets, from markets up north. They're coming down here because they know the cost of living is great, very reasonable. Companies are hiring. Have you driven through like Midtown Atlanta or downtown around the connector? You look around and there's cranes everywhere. There's just so much business. There's a lot of hiring. So Atlanta, we feel like it's a great pocket. And even we always talk about. We talked about this last week. Is real estate is you can't look at it on a national scale. It's very specific to the local markets. Even set aside Atlanta, you have to look at zip codes or even neighborhoods on what areas are really commanding higher prices or very stable prices. So I think Atlanta is really a great market for the future. And I think a lot of people are on the sidelines right now, right? And we talked about this again is people are starting to realize, hey, maybe we should dip our toes in the water. Maybe now is a good time to look. I think if rates continue to come down a little bit, you're going to have everybody jumping off the sidelines in the spring and summer, and they're going to be competing against this small, limited inventory of homes we have here in Atlanta, which is going to cause what? Multiple offers, prices to come up a bit, right? Frustration on buyers' standpoint. We dealt with that for a year and a half. It was a tough market.
Sad phone calls.
Yeah, tough phone calls. Sorry, out of 20 offers, you didn't get it. I mean, those are tough calls to make, and I know you've had to make them. So I think right now we have a really unique opportunity for buyers that are serious. And whether it's a good.
What they could do also is they could decide, okay, let's go ahead, take a chance, submit an offer on a home, and if it goes under contract, maybe circle back a year or two from now if rates are down and refinance.
Of course.
Is that a fair option?
Absolutely.
And again, the price points in Atlanta, depending on where it is, they're going to remain flat unless they overprice them, and they'll drop, obviously. But for most part, I think they're just going to keep creeping up. So
I agree.
3 years or 2 years from now, if you sat on the sidelines and you waited until 2 or 3 years from now, it's going to be a wash anyway because the prices are going to be a lot higher than they are right now.
Exactly.
So that's something for you to think about because you can look at it in so many different ways.
Right.
But I hate to be the bearer of bad news whenever I make those phone calls and say, I'm sorry, you just were outbid by somebody that was from New York or New Jersey or California with a lot more money to throw at a house. And I know it's not going to appraise, and they don't care.
Yep. Yeah, and right now we're seeing, but I will say this, since the new year, buyer activity is pretty strong. So we are seeing a lot of people that maybe sort of took a pause at the end of last year, maybe at the end of the summer or third quarter, said, I'm just going to take a few months off. I'm just going to chill out a little bit, and we'll get back into it maybe next year. Some of those people are coming back. So that's a good sign. And I think people that are in the market right now are going to have a much better time finding a home that they like, not having to overpay for it. They're still going to be protected by a financing and appraisal contingency, right? Where a lot of people last year were not. So I really tell people whether you should buy or not is an individual decision that you have to look at and make amongst yourself or your family. Because at the end of the day, you need to live somewhere. We're talking about housing. You either rent,
you pay someone else's mortgage,
right?
Renting.
Exactly. Or you buy, or you live with mom and dad, maybe in the basement. Well, I'm not sure they're too keen on that. So rent inflation is ridiculous. Rents are extremely expensive. So
they say they've softened up a little bit, but still, you're paying someone else's mortgage, and I'm sure you're aware of that. If you are a renter. But I think in the long run, your portfolio will look better if you go ahead and take that opportunity where it presents itself.
That's right.
Before everybody else starts coming down here and realizing that Atlanta is definitely a happening place.
Absolutely. And I think we do a rent versus own analysis. So we'll look at what a buyer's or a renter's current rent is, and we'll analyze, we'll take a period of whatever they'd like, 3 years, 5 years, 10 years, with what their rent is, with the basic rent inflation that they've been experiencing. And then we'll look at if you were to purchase a home, and we'll use very modest appreciation rates, 3%, 4%, which has been average over the long haul. And we'll look at what is the cost of renting versus the true cost of owning after you strip away the principal reduction, the home appreciation, the potential tax deduction, right, depending on if they itemize or not. The numbers are staggering. There is a reason why the net worth of homeowners is something like 40 to 50 times greater than that of a renter by a certain age. There's a reason.
I think that's a fantastic tool to consider.
Absolutely.
And do you think these interest rates that we had at 2 or 3% are going to resurface?
I mean, look, I don't think we'll see them again in my lifetime. I really don't. I think if you think about that, wasn't natural. I've been lending since 1996. Never seen them that low. I mean, I remember buying my first house in '98, and I told my wife, if we can lock below 8%, this would be just amazing. And I remember locking at 7.875, and I thought I hit jackpot. I mean, it was just like, we couldn't believe it. But what we saw in COVID with rates in the 2s and 3s, it was artificially suppressed interest rates. by the government pumping in all this money to lower the rates. Why? Because we were in a pandemic and they wanted to stimulate the economy. So that wasn't natural. So that, let's not think that that was something that, just is a natural phenomenon. It was artificial. It was great for people that could take advantage of it, right? Awesome. However, now we're paying the price a little bit because it got so overheated.
Right.
The Feds needed now to come in and sort of slow things down. And wherever rates are at, whether depending on, rates depending on credit score program, but whether you're at, 5.5 to 6.5 or wherever they're at, historically, those are really good interest rates if you look at history. Okay.
Yeah, I remember my first house I purchased in '83, and I was paying 16% interest with excellent credit.
Right. Yeah. You had a great rate at that time.
Oh, yeah.
Right. So it's all relative, and I think again let's compare payments. Let's compare what a mortgage payment could be, and there are also programs that can help with the monthly payments in the short term. We talked last week about the 2-1 buy down program.
Right.
There are programs out there that can help home buyers with lower monthly payments the first year, second year of that loan.
What does that 2-1 mean?
So a 2-1 buy down is a product that we can offer with our conventional or our government loans, where let's say somebody qualifies for a rate of 6.25. Okay. A 2-1 buy down, if we get the sellers to pay the buy down, the cost of the buy down, the first year of the mortgage, it's going to be 2% below the market rate. So instead of 6.25, that first 12 months, they're going to pay a mortgage based on 4.25% for that first 12-month period. Second year, it'll be 1% below market, so that'd be 5.25. And then years 3 through 30, it would be at note rate. Now, the great thing about the buy down is it's funded by the seller, and sellers are willing to pay this fee right now because they want these houses to move. Right, it's a great tool to get their house sold. So the seller pays it, right? If the rates come down and the buyer refinances before those funds are depleted, they don't lose them. The balance of that in that escrow account for the buy down is applied towards that payoff of the mortgage, so they never lose it. So you could. I mean, I priced a buy down the other day for a $500 and some odd thousand home. They were like $550 lower mortgage payments the first year.
That's huge.
Year 2 is about $260 lower, just for that one example. So that 2-1 buy down program could be a really good opportunity for people to get in the market, but have those payments lower the first couple of years.
Yeah, I think it's a fabulous option right now, and a lot of people are exercising that.
Yeah.
Let me ask you this. What are some of the common problems that loan applicants may encounter when they're applying for a loan?
Yeah. So looking, just recently over the last couple months when, somebody comes in, I think the biggest thing is I recommend customers talk to a lender, give me a call months in advance, ideally 3 to 4 months before you really want to start looking. Because if there's something on that credit report that is inaccurate, we want to try to get it fixed, or we want to give some advice on, hey, take these steps to get the credit report fixed. That's one thing. Once they've made an application, what we see is with self-employed borrowers, sometimes the accountants are very good at writing off, deductions. And sometimes we see the adjustable gross income so low because the write-offs are so excessive. Hard to get them to qualify. Now, the good news is we do have some interesting programs that will allow for to qualify people with like bank statements. So it's an interesting program. But writing off too many expenses can be an issue. The one that we talked about a couple weeks ago is you get, let's say you get a first-time home buyer. I think people think when they get out of school, they're going to finance a car, and then they're going to get a house. And they come to me, and I look at the credit, and I see 6 months ago, 3 months ago, they bought a car. And here you got a 20-something-year-old, 23, 24-year-old, I've seen $600, $700, $800 a month car payments. And it decimates their budget. It really has a big impact because we have to take that monthly payment into effect when we're figuring out how much of a mortgage payment can they afford.
Right.
So my big advice to people getting out of school is, I understand you need a car, you need transportation, but look at that monthly payment. Try to get a used car, especially if it's your first job out of college or high school or trade school, get a used car, right? Maybe you can buy mom or dad's car, pay them a couple $100 a month. Try to keep that monthly payment low, because we're not going to look at the fact that they financed 30 grand, 40 grand, or 50,000. We look at the monthly payment and how that affects their what we call debt to income ratios.
Yeah, I've heard stories about how people are so excited whenever they're in the closing phase of a house, and they go out and they buy furniture, they buy a refrigerator, whatever appliances that they'd like to upgrade, and it's one of those phone calls that nobody likes to make, and that's,
Yeah.
I'm sorry, you're not qualified as a result of your new credit.
Yep. We do a lot of counseling on that, because
And
that's
I know that you will tell them up front, do not buy anything until the house is
That's right.
closed and off the books,
That's right.
so to speak.
That's right. During the process, so once they've applied for the loan, you get them the contract. They're going through their due diligence and inspection periods.
Mm-hmm.
We always emphasize, don't let anybody pull your credit, right? Except for maybe utility company at the end of the process. But don't take, no furniture, right? And you have customers that call me up literally like 5 days before closing. I'm like, they're at this furniture store and they have this amazing sale, no interest for 5 years. I'm like, trust me. It'll be there next week. Don't worry about it. But those inquiries, what happens is we get a notification that says customer had an inquiry, and we have to investigate it. And when I call up and they say, well, I got this no interest, I bought $15,000 of furniture, we then have to go through the process of allocating a payment to that. And we're hoping, right, we're crossing our fingers that doesn't blow up the deal. So, we send a lot of reminders out. We talk about it, a lot of email reminders about that, but you got to be real careful during the process.
Yeah, I think some other issues is, like you mentioned before, if they don't fully indicate some of the past purchases or sticking points that they may have had, maybe a college loan or something like that. If they don't let you know all about that, it's going to cause you a little bit longer process of pre-qualifying them.
Yeah, I mean, we do talk about, before we pull the credit report, we do talk about, do you feel like there might be any challenges with any of these 4 things we talked about? Credit, income, assets, down payment, or
Employment status, for that matter. Somebody gets fired,
right.
During a process, that can be a
That
hard
can be a
situation.
problem. Yes, because all lenders today will verify employment within 3 to 5 days of closing. So yeah, that's a big one. So we always say, before you make any major changes with income, employment, talk to us first, right? Let's see if that's going to impact the loan.
And another thing that we real estate agents are guilty of sometimes is lack of communication. I know that you have systems in place where you will call them up, obviously, but you also have emails that update both the agent and the client as to where the loan is in its stage,
That's right.
its process stage,
Yep.
which I liked a lot.
Yeah, we branded, that's our Tuesday loan status update, so which is today. So we do our updates today. So every Tuesday we send out a written reminder and a written spreadsheet of, very simple to read. What's been done on the file, what's not been done, what are we waiting on? Listing agent gets it, selling agent gets it, and the customer. So everybody knows where we're at all times. So communication is important, and you're great with communication, and just having people in your corner, I think, is a big thing. So. And one thing I would caution buyers on: don't go it alone. I've seen buyers that don't quite know the process, but like, I'm just going to go to this open house and I'll work with the realtor that's selling the home because I'll get a better deal. I don't need anybody representing me. They think they can do it better, and I've seen so many customers get burnt that way. So I would really caution buyers to give you a call or find somebody that they trust to represent them. It's real important in today's market. There's, realtors are excellent resources and should be utilized.
Well, tell us, how can we get in touch with you if we have any questions or we want to set up an appointment?
Absolutely. Well, you can call me directly at 678-488-0653 or manthony at mutualmortgage.com, or follow me on Instagram at the Anthony Lending Team.
Well, Michael, it's been a pleasure. Thank you so much
Absolutely.
for sharing your expertise with us.
Thanks, Eric.
And again, North Atlanta, Metro Atlanta, even if you're out of state,
That's right.
Michael will be more than happy to help you as well as me.
Absolutely. Thanks for having me in, Eric.
I'm Eric Cunningham with Century 21 North Atlanta. Have a great day.